Hey everyone, Bruce Morris from the Tab Group here. Welcome to TabbForum's Market Structure Wave. Artificial intelligence is rapidly transforming the capital markets, moving from back office automation to front office decision support and strategy. Today, it's not just about efficiency, it's about how AI reshapes risk management, trading, and the very structure of market participation. Recognizing these trends, TabbForum will be publishing our annual special report on AI solutions in the capital markets later this month. In order to examine some of these trends before the report is published, we are very fortunate to have Eugene Grinberg, co-founder and CEO of Solve, join us to discuss this dynamic technology. Hey, Eugene, welcome back to TabbForum.
Thank you, Bruce. Appreciate you having me back.
Hey, it's our pleasure. So Eugene, last year you shared with our viewers some of the trends that you were seeing, i.e. predictive pricing, predictive modeling, and the ability to integrate unstructured content with this data. Fast forward 12 months, where do you see these trends today, and has anything new jumped into your focus?
Yeah. Appreciate the question. So I do think a lot has changed in the last 12 months. I think a lot of it has to do with the familiarity that the market, the firms that we speak to have around AI. The quality of the conversations have changed. Go back 12, 18, 24 months ago, there's still, I would say a little bit of confusion, right, around LLMs versus some of the quantitative AI. But that has changed dramatically in the last year. Initially, there was a lot of familiarity with some of the more quantitative and systematic shops, right, that have been leveraging algorithms for years, but firms that trade more traditional ways, they didn't really know where to start, right? So they felt like they were falling behind, but didn't know where to start. So that has changed. In the last 12 months, the quality of the conversations kind of across the spectrum of the firms has been kind of significantly deeper. We've been spending a lot of time looking at the backtest data of our predictive pricing models. Firms have been spending a lot of time looking at the results and getting very comfortable with the model's ability to predict where trades are going to happen.
Eugene, last year you shared how Solve helps support the market by providing trade idea generation and also supports the pricing process. Are there any new ways Solve is supporting the market today vis-a-vis these trends?
I think we know some of the challenges that the buy and the sell side firms are facing during the pricing process, right? There's tremendous amounts of data fragmentation across the asset classes, a massive number of CUSIPs, many of which don't trade or are not quoted. So as a result, pricing takes a lot of time. There's not often a lot of confidence in price formation, right? And that's exactly what we're after, giving our customers confidence and speed when it comes to pricing bonds that may not have a lot of data points, right? So to that end, we've been doing a lot in the last 12 months. A lot of it is working with our customers and listening, and some of the things that we have been doing are things like building a confidence score model. When our predictive price comes up with a prediction, right, that's specific to a size that the customer is looking to trade, it's specific to a side, right? Am I buying or am I selling? Oftentimes the question will come up, well, how much confidence does the model have in this price? Right. So one of the things that we've published is a confidence score model that works side by side with our predictive pricing, where for every prediction, it generates a confidence, which sort of represents its understanding of the fan of outcomes, right? Given kind of how much data went into the prediction, how range bound is the prediction, right? So that sort of translates into a confidence. That's something that's very meaningful to our customers. The other thing that came up is market participants, right? They're always fighting for real estate, right? So there's only even though you walk into a trading floor and everyone's got 12 screens, there's only so much real estate everyone has on their desktop. Having our pricing live within systems of kind of some of the critical integration partnerships is critical, and something that our customers has asked for. So a couple of months ago, we announced an integration into investor tools services, kind of the muni buy-side SMA market, kind of pretty significantly. So that's something that's been very well received. And our most recent announcement is we're expanding beyond munis, right? So our besides predictive pricing, right, our observable market data exists across a spectrum of asset classes. We are in credit, we're in securitized products, we're in munis, right? In credit, it's bonds, it's loans, it's CDS, and so on. We launched our predictive pricing for corporate bonds. So we went beta in June. In Q3, we expect to go into production with US dollar corporate predictive model, right? So those are some of the key areas of focus for Solve, as we keep going after the same trends.
Thanks. So any specific use cases you'd like to share with our viewers? And you don't have to name names if you're going to talk about some of your clients, but I'm looking for, what are you guys doing? You talked a little bit about the portfolio management side of this, but what about front-end business development or regulatory compliance? Is Solve involved in any of those areas?
So a lot of our focus is front office sales, trading, portfolio management. Generally, we see sort of three primary use cases. One is sort of the more traditional voice trading, right, where whether you're on the buy or the sell side, as we mentioned earlier, it takes time to come up with a price, right? It takes time to get confident in your price, just because of information asymmetries and significant data fragmentation in fixed income, right? So helping kind of the more traditional traders on both sides of the market come up with prices faster and with more confidence, right? So that's one use case that we're after. The second is the more systematic, kind of the more algorithmic push, which some of the leading firms have been doing for years, but many firms are looking to build algos, potentially bifurcate their strategies into high touch and low touch, and have algos kind of play a bigger role, right? So obviously algos are very data hungry, and this is the predictive price is a key input. And then I would say the third, specifically around our integration that I just mentioned with investor tools, is around the SMA portfolio management, right? I think sort of traditionally, if you or I were being serviced by an SMA provider, there's sort of not a ton of active portfolio management. There's not a ton of active alpha extraction that's happening on a day-to-day basis. Traditionally, you would have sort of once a bond in your portfolio matures, right, then you have some extra cash, your portfolio manager would just sort of purchase the new bond, and but there wouldn't be a whole lot of surveillance or a whole lot of portfolio management that would happen. Well, that's changing, right? So there's a lot of SMA providers that are trying to differentiate themselves by engaging in sort of more active alpha generation, right? So they're using our data to constantly look at potential substitutions in the portfolio to try to find bonds that look very similar but offer more attractive returns, as well as help you harvest some losses, right? So firms that are trying to do that and separate themselves from the pack are leveraging predictive pricing for the SMA wealth management.
Great, thanks. So my favorite question in these interviews is, I call it the crystal ball question. So Eugene, looking ahead, what future developments do you see AI bringing to the capital markets? And particularly with the emergence of agentic AI technologies that can act with more autonomy, how might these capabilities reshape trading, risk management, or even client interaction?
Yeah. Great question, and I always look forward to the crystal ball question, as I know you always end on that. So I'll offer a kind of both an optimistic and a pessimistic perspective. Maybe I'll start with the pessimistic one, just so I could end on a happy note. But I would say on a more pessimistic note, I think we're going to see a firm blow up in a very spectacular fashion, just like Knight Capital did, right, about 10 years ago, just because I do think there's a little bit of with some firms, there's a little bit of an over-reliance on AI, right, and agentic execution. Too much autonomy, I think, is dangerous. I don't think the technology is there yet, especially when situations come up in the market that the AI has not seen before, and it has to make a decision, and it could substantially go off the rails. So that's sort of my pessimistic view, right? That we're going to see another Knight Capital in the next 12, 24 months, with kind of a pretty spectacular newsy blow up. But on the more optimistic side, more quoting, more participation is extremely positive for the market, right? The market that suffers from lack of liquidity. By leveraging AI predictive pricing, by leveraging algos, firms will be able to respond to more RFQs. They'll be able to systematically quote more QSIPs, right? And as a result, I think there will be more liquidity in the market, which is great in a healthy environment, but it's especially important when there's volatility in markets, and that will support kind of some of the more choppy periods. So that's sort of my optimistic take.
Well, I'm rooting for the optimistic side of this side of the conversation. Eugene, thanks so much for sharing all your time and insights with TabbForum today. And to all our viewers, keep an eye out for our report. And if you're actually watching this video after the report's been published, there'll be a big red button at the end of the video that'll take you to the report's landing page. Thanks for stopping by for what was hopefully both an educational and an entertaining ride on TabbForum's Market Structure Wave. Hey, thanks again, Eugene.
Thank you, Bruce.